Let's talk now about how this could possibly be executed from a brand perspective. Jason Eisner joins us from Brand Quest this morning. And Jason, it's fascinating stuff, and of course, Coles isn't saying much today at all about these reports, but we know this is their intentions from reports over so long. Let's talk about Coles as a brand. How would you describe exactly what that brand Coles stands for?
Yeah, sure. It's a great question. I think Coles stands for trust because it's a big supermarket. I think it stands as convenience. And I think what we've been seeing lately and where Coles has been really successful is value. They've been really pushing that price.
So value is in there as well. It's interesting. I mean, there is an international experience on this. You've got Tesco, Sainsbury's, Marks and Spencer. They're doing deposits. They're selling personal loans in the UK. I also saw an example of Canada's largest food retailer, Loblaw. It actually offers not only personal loans and credit cards, but mortgages as well. Now, am I a bit strange? I mean, when I hear that you can get a mortgage from a supermarket, I just think I wouldn't want to do that. How do you change people's perceptions of a supermarket brand and say, actually, they're now also a bank?
I mean, it's a great question. But let's just think about where it's come from. The supermarkets, like even 30 or 40 years ago, didn't even sell meats as separate things. Like the supermarket as an experience has changed. And I think what we've seen over this course, and we've already seen insurance working really well with Coles, the Coles insurance arm. What they're doing is they're extending the fact that they've got convenience. It's not for all customers, of course. But for some customers, the fact that they have 762 branches, the fact that you can walk into that branch and you're there while you're shopping, you can also take money out, you can also transact, you can also get a mortgage. It's a one-stop shop. And for certain people, they'll love that.
So you think that this brand transition from supermarket giant to personal banker, mortgage offerer, you think that could be quite a seamless process?
Absolutely. Well, we've already seen it, right? Like, it's not something that's new. They've tried it with insurance, car insurance. They've already talked about going into life insurance. They've got credit cards. It's not that much further to just go, well, we're going to give you your whole banking products. And I think what you're seeing these supermarkets try to do is they're selling products at the moment, but now they're trying to get into service as well.
And so you're seeing the example of the insurance offerings that have been more recent. You see that as an example of why the extension can be easily made into banking?
Absolutely. I mean, you can see it, and it's been very successful, and that's where we're seeing it. And what's more, as you mentioned, overseas, you've got Marks and Spencer, and you've got Tesco. They're actually setting up, they actually have full banks and they have current accounts with customers.
Yeah, tell us a bit more about the overseas experience, because this is obviously what the Coles of the world are relying on to kind of make this transition.
Look, I think when it comes to supermarkets, you just have to go to the UK because they are so much more advanced than Australia. And I think we just look at that, what's happening over there, and these big supermarkets over there, M&S and Tesco, that are doing really, really well and actually making good money on it. And so it's just a natural extension. You've got the customers already coming. Why wouldn't you just add these services in?
It's interesting because sometimes I think in this digital, globalised world, we ditch all loyalty. Old, stable brands don't mean almost what they used to us. But what you're saying almost goes against that, doesn't it?
Oh, I actually think that in this digital world, the stable brands are actually much, much more important. In fact, the reason why you're going to succeed in the future is because of brand, because you have to, because the internet allows you, this digital world allows you to get at so many different products so easily from global, right around the world. The only thing that's going to hold you to it is not price, it's going to be brand. And if you can trust that brand, which I believe, we can clearly see that a lot of customers do for Coles, for instance, then you've really got equity that you can extend across.
The other thing I think as well is that, you think of the Bank of Queensland, you think of Suncorp, they've certainly made headway against the Big Four, but in terms of a stranglehold, the Big Four still hold that. Why would Coles have any hope in this space of taking on the Big Four? Because that's the line we keep saying and reading, that Coles will take on those Big Four. Well,
look, it's a really interesting question. It's a huge market. So how much do they need to take on the Big Four is a question. As you quite rightly said, the Bank of Queensland's already made it. But here's the interesting thing, right? A Coles or even a Woolworths have the kind of size value that these other banks don't have, right? They actually have transactions going through there. Half of all transactions half of all transactions potentially in Australia go through there. So they've actually got the size to be able to compete against them.
And you've waded into the territory of my next question, which was Woolworths. Can we apply everything we've said to Woolworths? Can they make exactly the same transition in such a seamless way, in your view?
Well, again, yes, of course they can. They've got two big brands here. There are people that go to Woolworths, people that go to Coles. What's more, there's actually been studies that show that if you've got your banking products there, that you're actually even more likely to spend and keep to those supermarkets. So there might be a lock-in clause that because you've got banks with a bank account there, you're actually going to be more likely to shop at that one particular supermarket instead of switching.
Fantastic. Jason Eisner, it is fascinating, and thank you so much.
Thank you so much.
Thank you. So offering certainly a bit of colour to that story today.